Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, September 6th, 2016. Markets are trading fractionally higher today. The Nasdaq is leading the charge with stocks like Amazon and Facebook making new all-time highs today. But there is a crack here. It's a rotation of capital, not an all-out rally in the stock market. And I think that's a very important point to make when looking at the stock market, because the average person would look and say, oh, look at Amazon, look at Facebook. This is a great market. But what you have to recognize is take a look at Goldman Sachs today. Goldman Sachs today, while off its lows, is negative on the day. JP Morgan, taking a look at JPM here, negative on the day. There is a rotation out of bank stocks, partly because yields are falling, but as also other sectors out there. For instance, 3M is down 0.5%, 72 cents today. So you're seeing certain kind of older school stocks not doing as well. Now, what's the cause of this? And this is a very important point, folks. The cause of the weakness in certain sectors that are usually slower and safer is because today we got the ISM non-manufacturing index. All right, this is a gauge, economic gauge of growth in the services industry. Obviously, non-manufacturing, the other option is services. So this economic data was extremely, extremely weak. And all of a sudden, interest rates plummeted on it. All right, we saw interest rates collapsing based on the fear that the market, the economy here in the U.S. may not be nearly as strong. If you couple that with a jobs number on Friday that was just strong enough but borderline, people are definitely getting a little nervous today. And you can see it here if we go to the TBT, which was on the verge of breaking out and then collapsed today. Take a look at that drop. It's come back a little bit off its lows, but still a pretty amazing collapse there. And it literally, if you go to the daily chart, I'll bring up the daily in 1 second. In fact, let's do it right now. This was literally borderline a breakout. Look at this. I mean, it was hammering right on this trend line right here. So you can see there, so close to a big breakout and just getting hammered down once again. All right, now eventually either this is going to break out or collapse, and we're going to have to see which way it is. But today the action is very much risk on. All right, so what does risk on mean? Well, it means you invest in Amazon. Amazon's risky, right? It's one of the riskier tech stocks. Look at this move, up 15, almost $16, 2%, new all-time highs on Amazon. Take a look at Facebook here. Facebook. Look at that move on the daily chart of Facebook. Look at the green candle there, up 3 points or almost 2.5%. So money is running into risk because yields are falling. Yields falling tells you that people are saying, oh, I don't want to get a measly 1.5% on the 10-year. Instead, since the Fed's not raising interest rates, I'm going into risky assets, and that's why you are seeing tech stocks get money flow from other sectors that are kind of lower, kind of safer, safe havens. They don't perform in good bull markets. But again, I caution people, this is not a good sign of a healthy market. This is a market that is reacting to a drop in the likelihood that the Federal Reserve will raise interest rates. So very interesting to see there. But again, you can see it. I mean, take a look at Netflix today. Netflix almost up 3%, hitting the daily 200 moving average. Even Tesla, which has gotten pounded recently, having a good day, up almost 2.5%, trading back at 202.50 on the day. So again, tech is in today. Everything else is kind of stalling. A good example of that is Disney. Look at Disney down on the day, and that stock's really had a lot of trouble lately. You can go to other stocks like I mentioned, 3M. 3M down on the day, struggling. You can see here was a pivot high here. It's having a lot of trouble breaking out. This is actually a little bit of a bearish pattern formation on that chart. So again, the old school kind of slow movers like GE doing poorly today, coming down, while the tech stocks are ripping higher. All right, going back to the spiders, let's take a look at the SPY, which currently trades up 30 cents. First thing you should notice when you look at the spiders, look at the volume today, 38 million on the day. That is exceptionally light. We are on pace for the lightest trading day of the year. There's about 35 minutes to go. I think we'll do maybe 45 million on the trading day. It is incredibly light. But again, in all fairness, it's partially to be expected since it's the day after a holiday weekend. There's what I call a hangover, which again, anytime you get price action after a holiday, a 3-day weekend, it's usually exceptionally light because of that hangover effect. People are tired from hanging out with family and friends and going away with their kids on vacation. They come back, they're more lethargic. That first day back is usually light volume. Then you get a clearer picture of the market the next day. That's what I'm going to be looking for tomorrow, folks, to see what we get tomorrow. The one thing I would note on the spiders here, last thing I'll say, you have a little bit of a triangular pattern. Connect these lows down here up, and then if you zoom out, connect this high down to here, and then it looked like we tried to break out here, and it failed, and again here, and again here, and it keeps failing. So it's interesting because you do have a bullish pattern, but it's having a lot of trouble breaking out to the upside here on the SPY. We'll see if into the end of the day you get a little end-of-day short covering buy rally, which oftentimes does happen. That'll be very telling for tomorrow's price action. If we stay weak and we actually come down into the close, I would be bearish for tomorrow. If they're able to pop the markets up a little bit here, close it up near the highs or just above the highs of the day, then I think you look for a bullish move, at least initially tomorrow on the stock market. All right, guys, enough said here. Come join InTheMoneyStocks.com. I already put out one new trade alert in the research center today that I played, and I also put out an options alerts trade in the options alerts. Both are rocking and rolling. Both of them actually are already in the money a little bit. Let's get rocking and rolling, guys. Take care.